Hello student. Now in this video we are going to discuss the second and last method of calculation of depreciation, that is diminishing balance method. In the first video of depreciation I have told you about the concept, merit and demerit and how to calculate depreciation from diminishing balance method. That diminishing balance method is that method in which we calculate depreciation on the diminishing value of machinery or any fixed asset. So let's start discussing this method. A company purchased a machinery for 50,000 on 1st October 2007. Another machinery costing 10,000 was purchased on 1st December 2008. On 31st March 2010, the machinery purchased in 2007 was sold at the loss of 5,000. Company charges depreciation at the rate of 15% per annum on diminishing balance method. Accounts are closed on 31st March every year. Prepare account for 3 years. Okay, so first of all we mark the important amounts, dates and the percentage. So first machinery is purchased on 1st October 2007. In the previous video I have told you about that when machinery is purchased in the mid of accounting year, we have to charge the depreciation on remaining month the machinery is run. Okay, so the remaining month is here is 6 months. Okay, another machinery purchased 10,000 on 1st December. So December, January, Feb and March you have to charge 4-month depreciation. Okay, and in 2010 the machinery which is purchased for 50,000 is sold at the loss of 5,000. The rate of depreciation is 15% per annum. So you have to prepare 3 years machinery account. Now we will prepare that. First, on 1st October, first machinery is purchased for 50,000 and depreciation is charged only for 6 months. That is 3,750. How it is calculated? So the 50,000, 50,000 into 15 upon 100 into 6 upon 12. 6 months remaining and total month in year is 12 months. So the amount will be 3,750. Now the balance BD will be calculated as 50,000 less depreciation, that is 3,750, 46,250. Okay, quite easy. In next year we have to transfer the balance CD into BD, brought down. On December 1st in 2008, a second machinery is purchased for 10,000. Okay, so you have to charge 4-month depreciation on it. But on the first machinery that value is 46,250, we have to charge 15% depreciation in full because in this year machinery is run full year. So the remaining balance is 46,250, 46,250 into 15 upon 100. Okay, that is machinery first. On second machinery you have to calculate only for 4 years, so 15 upon 100 into 4 upon 12. 4 remaining year and 12, that is total month in year, that is second machinery. Okay, so every time in this method the value of depreciation is changed. Okay, so here is 6,938 and 500 for 10,000, only 4-month depreciation. So this is the total amount of depreciation, and balance CD will be 39,000 for first machinery, 39,312 and 9,500 for second machinery. This balance is transferred to balance BD, this one. Okay, and in next year again we calculate the depreciation amount. Okay, so this will be the total. Now in this year we sold machinery. So first of all we have to find that what is the sales value, how it is come in this column. So for this we have to prepare working note. So here is the working note. On 1st April 2009, the value of first machinery is 39,312 as you calculated. This is 39,312. Okay, and depreciation for 12 months you have to calculate, so easily you can calculate here. 39,312 into 15 upon 100 and 12-month depreciation, so you have to calculate. So 12-month depreciation will be this. On machinery is sold on that day and the value of machinery is this, the loss value is given in the question, you have to less this, and the remaining balance will be sold value. Okay, sales value is 28,415, right? So this will be written here. If you sold machinery on loss, you have to transfer it in the profit and loss account in the buy side column. So it will be written, if you sold machinery in profit, you have to write this in two side column. Okay, in debit column and credit column. So the remaining amount is this for machinery first depreciation and balance of the second machinery, because this machinery is not sold. So this is the method for calculating depreciation in diminishing balance method along with the sales of machinery. Now another very important question for the depreciation. Sometimes in the question there is mention about the CGST and SGST as well as IGST. So you have to prepare machinery account as well as ledger account of these taxes. Okay, so here the question on it is, a firm purchased on 1st April 2015 a certain machinery for 5,82,000 and spent 18,000 on it. So the value of machinery will be, as in the previous video I had told you, if you spend some amount in the starting, in the initial stage of purchase of machinery, you have to add that expense into the value of machinery. On 1st October 2015, additional machinery costing 2 lakh was purchased. Okay. On 1st October 2017, the machinery purchased on 1st April 2015 was auctioned. It means machinery was sold at 2,86,000 plus CGST and SGST of 6%. So only you have to prepare a ledger account if there is mention in the question. Okay. Now the new machinery for 4 lakh plus IGST was purchased on the same date. Depreciation was provided annually on 10% on written down value method. Prepare machinery account for the 3 years and ended 31st March 2018. Okay, so you had to prepare only machinery account. Now this is the solution of it. A book value of the machinery will be 6 lakh. Why 6 lakh? As I told you, 18,000 is spent on installation, so it will be added in the value of the machinery, that is 6 lakh on 1st April, and another machinery in the same year is purchased for 2 lakh. So the total value will be 8 lakh. But the depreciation is charged in the different columns because first machinery is run for 12 months and the second machinery is only for 6 months. So for first machinery 10% depreciation is 60,000 and for second machinery it is for 6 months. Okay. So for second machinery it will be 10,000, that is 70,000, and a different balance series should be calculated because it will make your calculation in the sales of machinery quite easy. That is 7,30,000. Now this balance is transferred to the balance BD, different values of first and second machinery, and again the depreciation charge for these two machinery different column. As in diminishing balance method, the value of depreciation change every year. Okay, so this is the valuation. Now this balance BD again transfer to here, but in this year the machinery is purchased as well as sold. Okay, so you have to remember that preparing a working note should be compulsory in the sales of any of the machinery. So here is the working note. The book value of first machinery is 4,86,000 in 2017. Depreciation is charged only for 6 months because on 1st October that machinery will be sold. So in 2017 machinery is run only for 6 months, so you have to charge only 6 month depreciation. Okay, so how it is calculated? Again 4,86,000 into 10 upon 100 because 10% depreciation to be charged and machinery is run only for 6 months. Okay, so you will got 24,300, that will be less, and in question there is the sold value is written. So machinery is sold for 2,86,000. CGST, IGST, it should not be calculated in the machinery account, it is separately calculated in ledger account, but in the question there is no mention for preparation of ledger account. So 2,86,000 is the sold value, so it will be written here this. But you can discover that the machinery value is 4,61,700 on 1st October 2017 but is sold at loss at 2,86,000 and the loss will be transferred to the PL account, profit and loss account. Okay, so you have to transfer it here in profit and loss account. Okay, this is the value of, first you put the bank account because the bank account the amount of sales value and the loss and the depreciation value for both the machineries and the value of first and second machinery balance series, right? So this is the total method of calculation of this, and another machinery is also purchased on same day, so you have to charge in the third machinery that the value of that third machinery which is purchased on 1st October 2017 and 18. So this is the method for calculation of depreciation. In next video, we will solve some more numericals. I will post some numericals revision videos till your examination. You can easily check them and solve them, practice them with the help of videos. In the next video, I will discuss first the next chapter, capital reserve and revenue reserve and types of reserves, and after that I will post revision video. Okay, if there is any doubt you can ask me easily. Okay.